All right, we're live. Okay, welcome everyone to our weekly recap. This has been a huge week for crypto, obviously, probably the biggest week this year. And that's saying a lot because we've had just crisis after crisis in 2022. But this week has been huge because, as you probably all know, the third largest centralized crypto exchange completely unraveled, FTX, which was led by SBF, Sam Bankman-Fried, one of the most well-known personalities in the space. He quickly rose to fame, and then, the higher they rise, the harder they fall, as they say, and that's certainly the case with SBF. So we have our writers here. Our editor, Ed, is joining in a few minutes, and we will get you all up to speed on the latest, how we got here, the initial fallout, but we're sure we're seeing just the tip of the iceberg of the dominoes that will fall, and the first lessons that we can take from the few days that have passed. So before I turn it over to our writers, I want to also thank our sponsor, Goldfinch, for sponsoring the show, and we'll get back to more on them later. So, Alex, why don't you walk us through just the latest? What's going on with FTX right now?
The very latest that I've seen, it's moving so fast that something has probably happened in the minutes since, but the very latest is that FTX has filed for bankruptcy, and that's not just FTX International. That's almost every company in the FTX family, 130 of them, actually, most of which, none of you would have ever heard of. But it includes, notably, Alameda Research, the trading firm that Sam Bankman-Fried had founded and whose ties to FTX were what kind of caused this whole collapse. And it unfortunately includes FTX US, which as recently as yesterday, Sam Bankman-Fried was saying is totally fine and has all the money it needs to honor customer withdrawals. Why FTX US was included in the bankruptcy filing and what the actual state of its financial well-being is now all of a sudden open to question. So that's the latest. Got a bankruptcy document in front of me that I've been scrolling through, but I haven't really had any time to process that, so I don't have anything to say about that just yet. Other than, we already knew this. Alameda Research says that it has more than $10 billion in assets and more than $10 billion in liabilities. It's very vague, not very helpful. Other than that, even though it's filed for bankruptcy, a lot of folks have probably seen that people are able to get their money out of FTX right now. Withdrawals have been happening. They started actually yesterday, on Thursday, around 11:30 a.m. New York time. And former FTX employee clarified a little bit later in the day, because speculation was running wild. Only Bahamian residents, because again, FTX is based in the Bahamas, only folks who are residents of the Bahamas are allowed to withdraw right now. And he pointed to Bahamas regulations as the reason that they had imposed that restriction. Now, you're seeing a lot of people getting really crafty in how they're trying to find a workaround to this. So something that you may have seen is that NFT sales on FTX's NFT marketplace, which had never been all that popular, are now exploding. That's because Bahamian residents are listing NFTs for sale on FTX's NFT marketplace, and then people with funds that are trapped inside of FTX are buying these NFTs at wildly inflated prices, and then those Bahamian residents are then depositing the money that was used to pay for the NFT into an account of the FTX customer's choice, if that makes sense. So I'd recently spoken to Andrew. I don't want to get his last name wrong. Thurman at Nansen. He's been looking at all the on-chain data recently and kind of tracking how all this stuff has been going. And about $20 million last he checked had been used to kind of $20 million worth of NFT sales had been used to get folks money out of FTX so far. Let's see what else. I mean, the Bahamas have.
Also,
Go ahead.
I mean, to add to kind of the very latest news, together with the announcement that the entire FTX group was filing for bankruptcy, you know, Sam Bankman-Fried himself is also has now resigned, which just, I think, adds to the degree of implosion that we're seeing. I think it just bears reminding that just a week ago, over a week ago, this was the most recognized, one of the most trusted institutions in crypto. Sam was lobbying in Washington, D.C. FTX was sponsoring the Miami Arena. He was in panels with Bill Clinton. It's just incredible how quickly this empire has fallen. And today we're seeing just like this nail on the coffin with them filing for bankruptcy. It's just truly, truly remarkable. And we have seen huge kind of degrees of collapse this year, with Luna, with Celsius. But I don't know if you guys think this tops them all. I think.
Well, like you said, Sam's degree of the degree to which he was involved in the U.S. government and generally very high-profile people in a way that I think Suzu and Kyle Davies and maybe Do Kwon weren't in a certain way. I mean, he was seen as this kind of this, I want to say bastion, or he was the connecting piece between crypto and Washington, and to see someone like that blow up, it hits a little differently than people who seem to be exclusively out to make money, and especially Sam's involvement with effective altruism. I mean, I was aware of that movement before I knew who Sam was, and kind of thought of him as a champion of effective altruism, and to see everything blow up like that, I mean, it definitely takes a hit to that movement of kind of earn to give. So
I mean it's so ironic that he was championing this ideal, I don't know how you call it, this movement, and at the same time just being extremely greedy and reckless with user funds. I see that Ed has now joined, so I'll adding Ed, our brave editor, to the stream.
Hello, everyone.
We were just going over the very, very latest on FTX. So the bankruptcy, SBF resigning, the withdrawals that are happening, which right now are only restricted to Bahamian residents, and how frustrating that is for FTX users. I mean, now with bankruptcy proceedings, we should see some steps being taken to recover some user funds, but the fact that only people in the Bahamas can withdraw has people very kind of suspicious and skeptical, and I think rightly so, given everything that's happening, saying it's basically insiders who are being able to withdraw their fund right now. I mean, that's all speculation. So, that's That's my kind of observation. That's what people have been saying, but it just doesn't look right. I don't know. What do you guys
Something
think?
worth keeping in mind, and Ed, you I think would know more about this, and Cam, you as well would know more about this than I do. So correct me if I'm wrong, but it's my understanding that now that bankruptcy has been filed, going as far back as 90 days, anybody who withdrew money from FTX might have that clawed back over the course of bankruptcy proceedings, so that this can then be, I guess, doled out in a, I don't know, more equitable manner.
Wow.
So anybody who would manage to get money out of FTX over the past day or the past week, they might have to give that back.
That's insane. Wait, are you
Another
reading that
thing,
from the bankruptcy documents?
this was from my conversation with Andrew over at Nansen.
Okay.
Something else that so Ed, if you know more about bankruptcy proceedings than I do, if you can confirm that would be great.
Well,
One other thing that he pointed out was that Sam Trabucco, the former co-CEO of Alameda Research, resigned within that 90-day window. So if he happened to get any kind of golden parachute on his way out,
just keep in mind that bankruptcy is litigation. There's a trustee that will be appointed by the bankruptcy court who will referee the process. And that trustee has a lot of power in deciding how assets are divvied up and redistributed to the creditors. It could very well be that during that process, a clawback would be initiated if the trustee deemed that it would be fair. But the big question that would come up in this process is, what are the assets? I mean, you have to husband a pool of assets that are real and can then be redistributed to the creditors. That's step one. You need a pool of assets to actually redistribute. And then you would decide who are the parties that are eligible for redistribution. And then they would be placed in priority. There would be basically a queue of, here's the ones at the front of the queue, here's the ones in the middle, and here's the ones in the back. With a publicly traded company, equity holders, stockholders are usually at the back of the queue. Debt holders would be at the front. But FTX it's a strange beast, isn't it? I mean, it's pretty much a venture-driven entity. I don't know if the venture capitalists would qualify as creditors. Customers would be creditors maybe at some point. But the big question again is, what are the assets of FTX? I mean, what does it own?
I mean, obviously, there's customer funds. There's also public filings of FTX owning millions and millions of dollars in property in the Bahamas. So
are those
presumably,
actual mortgages? I mean, they own that property, or are those leases?
I think I saw that they own property.
Okay, well, if they actually own property, that's good, because those are hard assets.
Right, they can sell them.
That can be liquidated and redistributed to the creditors.
Yeah, but you're right. I think the first step will be for lawyers to figure out exactly how much they have, and that's that's what drove the fall in the first place. So maybe let's take a step back and talk about how we actually got here. So Ed, maybe you can lead this discussion, but I think the trigger was this story on CoinDesk pointing to the fact that 40% of Alameda Research assets was actually FTX's token, FTT token. So Alameda Research is Sam Bankman-Fried's hedge fund, very closely tied to FTX. The fact that they were basing their assets on this, made-up token.
So imagine if the NASDAQ, which is kind of a not-for-profit exchange, but imagine if the NASDAQ also owned a hedge fund, and the NASDAQ was able to redistribute shares in various companies, holdings, et cetera, into its own proprietary hedge fund, and do so without any scrutiny from regulators or customers. That's the relationship that FTX had with Alameda. So it violated every tenet or value that DeFiers hold dear, that people who believe in crypto and believe in DeFi and believe in the whole mission that they hold dear, which is transparency, on-chain data that's available to everybody. What FTX had with Alameda was a black box, which is a hallmark of Wall Street. So there's irony there, that this thing that's supposed to represent the future of finance is actually very, very old-fashioned.
Yeah.
And so when CoinDesk managed to get a hold of an internal document last week that showed 40% of Alameda Research's trade book was FTT tokens, which are created by FTX. So this isn't Bitcoin, this isn't the US dollar, this isn't an independent asset that can be valued by the market. This is a controlled, centralized asset that FTX directed. All credibility was lost because you could manufacture as much FTT as you wanted to support whatever positions Alameda had. So as soon as that document hit the tape, then investors, savvy investors, immediately knew, oh my God, maybe the emperor has no clothes here. Maybe Alameda is not as strong as everybody thought. And if Alameda is not as strong, maybe FTX isn't as strong.
Yeah.
And as we know, CZ at Binance, who was sitting on $500 million worth of FTT, saw that document, saw that news, and said, I got to do some risk management here, and said, I'm going to have to sell FTT.
Yeah.
And as soon as he did that, that became the catalyst for a classic run.
Exactly. Yeah. Before we get deeper into CC, which is such an interesting part of this story as well, we need to give a shout out to our sponsor, Goldfinch. So let's run that and stick around because we'll there's a lot more to the story, obviously, and the fallout. So just couple of seconds of on Goldfinch coming up right now. Goldfinch is a decentralized credit protocol with a mission to connect the world's capital to the world's growth, with yield from real-world lending and loans collateralized by real-world assets. The protocol has announced Goldfinch membership, empowering Goldfinch investors and aligning the protocol's participants with the network's long-term success. Upgrade your participation for enhanced yields from member rewards and own the new global credit paradigm. Sign up for the waitlist today at goldfinch.finance/membership. Okay, and these are exactly the kind of players that we should be supporting, actual DeFi protocols like Goldfinch. And not opaque and centralized entities, by the way. So I told you guys we would be quick with a shout out. Let's get back to what CC's role was in precipitating this fallout.
Yeah, I think he clearly spurred a sell-off by saying, I'm going to throw 500 mil worth of FTT into the marketplace. Now, he was going to do it on a graduated basis. He wasn't going to dump it all at once. He was going to do it through December. But as soon as that signal hit the market, the run began. And I think one of the lessons that we've seen in this is that if there's nothing inside an organization to provide support for either its own token, or in this case, its very proposition, then fear takes over. And this is what happened. Fear absolutely took over as soon as CZ did that. And as the withdrawal requests began to pile up at FTX, it didn't have the liquidity to meet the demand. And then it just starts to feed on itself. And again, the irony is quite thick here because this is exactly the type of bank run that has happened, going back 2 centuries in, banking industry history, that crypto is supposed to fix, was supposed to surpass. And to your point, Cami, I think the lesson coming out of this is that for all of the crypto bells and whistles that FTX had around it, it wasn't a truly decentralized platform. It was a black box. It was controlled by a certain number of people who, and as soon as that information got out, as soon as that knowledge hit that, oh my God, they're controlling this token, they're using it to bolster the fortunes of their own proprietary hedge fund, it was game over.
And didn't Caroline, she offered, who was I believe the CEO of Alameda, I think she offered to buy FTT from CZ OTC, and her liquid
at 22 at 22.
Yeah, at 22. Yeah. So I think that was pretty dangerous, right? I mean, because that's kind of showing their the point at which they're the level at which they need to defend if they're leveraged against that token.
That's a good point, Owen. But it also shows their lack of confidence.
Yeah.
Like they would actually make a statement and say, "Well, we'll buy all you got," and the market saw right through that.
Yeah.
The market saw right through that and said, "Oh, this is a bluff."
Well, yeah, and it's insane. Well, yeah, and if they're trying to defend that level, it's like then of course everyone's going to attack that level, and I think that, I mean, I'm not sure, but I think that was a big misstep. Alex, I don't know if you're going to chip in there, but yeah.
I mean, yeah, no, I saw that tweet and I thought that it reeked of desperation. I was actually kind of shocked that she had put that out there.
Yeah.
I mean, the only thing that tells anybody is please don't sell all that FTT. Please.
Yeah.
Like,
you're right.
Like we'll spend however many hundreds of millions of dollars it takes to make sure that FTT doesn't hit the market.
Yeah.
Right.
I think it's worth also discussing, CC's motivations maybe, or just, how he played his hand.
I mean, Sam Bankman-Fried, like, it's so funny when this first blew up, CZ, okay, we're going to sell 500 million worth of FTT. And then all the news reports came out about like the feud between the two crypto titans. And they were both on Twitter saying, there's no fight, we're both building for the good of the ecosystem. And they were saying, throughout the week as the Binance acquisition of FTX was being discussed and going through due diligence, they were still saying that. And then SBF resurfaces yesterday morning to finally offer his apology for how everything went so horribly wrong. And he signs off with, to a certain sparring partner of mine, all I've got to say for now is, well played, you won.
Right.
And it's like, and there was also an internal note that SBF had sent FTX employees in the middle of this week that made its way online. And in it, he said that he thinks CZ had never actually intended to acquire FTX. He thinks that offer was made in bad faith. So there's obviously, a lot of bad blood there.
Yeah.
I mean, it's a huge rivalry, right? Binance has been the biggest crypto exchange for years.
And was an investor in FTX.
The first.
And CZ has been just, like a big part of this industry going back, I don't know, 2013. He was in like super, super early, built this huge exchange, Binance, and there's this upstart, FTX, and Sam Bankman-Fried, who apparently just like came out of nowhere, just grew so quickly in the past couple of years that they became natural rivals. And from investor VC letters and reports, we're seeing that SBF was just positioning himself and FTX as like the regulated, like
Compliant.
the compliant, right, the compliant player versus Binance. So that must have kind of rubbed CC the wrong way and just like tightened or made that rivalry even worse. So I think he saw his chance with this news report, that it was actually this token that was holding up SBF's empire. And yeah, he played a really aggressive hand, saying that they'd sell the token, and that precipitated everything.
Yeah, and I think he might have, or just like I think he might have. I mean, he obviously had his eye on FTX for a long time. I mean, I was talking to someone a bit earlier this week, and they did say that FTX can. Cause I'm not sure what FTX was valued at in its last round, but that
32 billion.
Jesus, right? And it's like, that's out of nowhere. And saying that like Alameda can potentially push volume through FTX, and FTX can value itself off that volume. So point being that I'm sure CZ can also just look at FTX's valuation and wonder how that's happening. I mean, he runs an exchange as well. So I think he might have been aware, I mean, long before the CoinDesk article, that FTX was built on a pretty fragile foundation.
Probably.
Just adding on that, I don't think it was just the CoinDesk article.
Yeah,
sure. I think you raise an interesting point, Owen, because when you look at the Alameda FTX symbiosis, on the one hand, you could say it makes sense, fiscally speaking, because Alameda would benefit from all the intelligence and volume that FTX could provide.
Sure.
Now we know that FTX was also available to plug holes in Alameda's trade book. But that would be a source of strength to Alameda, and it would kind of embolden borrowers and counterparties to Alameda to trade with it because they know that FTX is behind it. But by the same token, no pun intended, but by the same token, it also becomes an Achilles heel because the relationship between Alameda and FTX is bound to raise eyebrows. And the preferable treatment that Alameda would receive from all of that liquidity that FTX has available would raise suspicions among counterparties and the rest of the market that something's not quite right here and something might be fixed. And because this is an unregulated space, this is allowed to continue. This relationship is absolutely fine. No one is really questioning it going forward. But the truth will out. It's an old saying. I think it's a good one. And,
I think this like tight relationship between FTX and Alameda, like that was already enough to raise eyebrows, but they in theory could have kept some separation between the two, which now it's coming out that they clearly didn't, in the worst way possible, which was that FTX was lending out, I mean, allegedly, according to reports by various different, media outlets. Wall Street Journal has reported on this, Bloomberg has reported on this, citing people familiar and so on. But the speculation is, the allegations are that FTX was lending out customer funds, like its own customer fund from the centralized exchange to Alameda Research, the hedge fund, and that Alameda was backing these loans again with FTT tokens. So, they started building out this empire based on just like on this token on itself. And passing on these like their native token back and forth, and using customer funds to make a profit. I mean, for like Alameda Research is a hedge fund, and we've seen the kind of aggressive player they are in DeFi. They've there's on-chain activity supporting how they pump and dump tokens. They were involved in so many yield farms in kind of the DeFi summer era. So I don't know if at that point they were doing this with FTX funds, but like, were they using FTX customer funds to participate in these like extremely risky yield farms, like in DeFi?
Well, I think Cami, what you're raising is an absolutely crucial question, because it would probably be against the law, and B,
and that's why they're being investigated by the SEC.
and B, but it would also, again, just to get back to this point,
Mhm.
it violates everything that decentralized finance is supposed to be about. Decentralized finance is supposed to be about transparency. This should all be visible on chain. And what this entity, this kind of binary entity of Alameda and FTX was doing, epitomizes the worst excesses of Wall Street. This is the stuff that DeFi is supposed to be an antidote for. And that's why I think that theme is going to be very interesting going forward, as the DeFi community tries to separate and say, hey, don't paint us with the brush.
Mhm.
That this isn't, we're not Celsius, this isn't FTX, this isn't Alameda, this is the kind of black boxy stuff that shouldn't be done. It doesn't have to be done.
Yeah.
If you use blockchain technology properly. So in a way, you could almost argue that what SBF and FTX were doing was fake. It was like fake crypto. It was.
They were
I mean,
using digital assets. I mean,
to me, all of CeFi is fake crypto. I mean, to be completely honest, like, it's using the same mechanisms, the same rails as traditional finance, as, same old financial system that's been used for decades, same level of transparency, which is none, and just sticking tokens inside instead of stock, instead of equities. It's the same thing. So it's like, why have we developed this groundbreaking, revolutionary technology if we're not using it? To me, that's why, DeFi is the real innovation here. It's the real thing that actually brings value to the space. If we're using CeFi, if we're trusting others with our assets, if we are, not taking advantage of having open source based protocols, permissionlessly executing smart contracts, then what even are we doing? Let's stop trusting all these opaque, centralized entities, and we see how these things end.
But as Owen wrote about this week, I mean, he focused on Solana and the fallout for Solana as a result of this whole episode. FTX had been an early investor in Solana, so there was this immediate contagion that kind of took place. But Owen, talked to people in the DeFi community, and who were, desperately trying to say, hey, don't paint us with the same brush. I mean, Owen, you were taking soundings in that community. That's everyone was really upset, right?
Yeah. I mean, I think that was like the universal reaction. I mean, you saw everyone, all of DeFi's leaders of what I would think are the most decentralized protocols. I mean, you don't want to be an Ethereum maxi, but I mean, those are kind of the people that I feel like have the most, I don't know, kind of emblematic of decentralization protocols, and I just don't want to be a maxi of any chain. But yeah, I mean, I saw things from Hayden, from Robert, from Stanny, all saying, this is not a DeFi problem. And as you guys have said, it's really hard when all this malpractice is happening with digital assets to differentiate what crypto is from what DeFi is. And I think that's something that the Defiant needs to do. And I think that's something that kind of everyone needs to do moving forward. And maybe this is forcing the issue, and people really need to kind of take things to the next level and really pound that home of what self-custody means and taking control of your own assets, because it's time. I mean, people were talking about not your keys, not your coins back in 2017. And it's like, it feels like we haven't gotten that far in a certain way, which is sad. And yeah, I mean, I think I was talking to Blake actually of Goldfinch yesterday, and he was saying that, I mean, and I think CZ tweeted about this, but that, you know, exchanges are going to have to start posting proof of reserves, right? And there's a very efficient way to do that with ZK knowledge proofs. And I think is going to start to need to do that. And I think that's an easy value add to show that, like, that's even, you know, Blake was saying that's even faster than banks in terms of you can audit yourself potentially very quickly and efficiently, and without having to pay an auditor. So saying that the industry really needs to head towards that place where we kind of demand transparency. And that's really hard because everyone's trying to make a quick and dirty dollar right now. And, you know, maybe, I mean, you know, you'd hope that during this, you know, what could be a couple of years of kind of despondence and building, that like crypto can finally flesh out bad actors and step it up and ask a higher degree of accountability. But we'll see.
Yeah.
And then going back to just like the timeline. So we had talked about CC announcing they would sell FTT tokens. That sparked a bank run, though that's not the technical word, but, you know, huge amounts of hundreds of millions, billions of withdrawals from FTX.
5 billion on Sunday. I think
5 billion in one day.
The official, yeah.
Yep.
So once CC sparked those withdrawals, he came out with, you know, this letter of intent to buy FTX. But, you know, Ed, maybe you can continue the the timeline here.
Well, yeah. So there was about a 36-hour period, Alex, where Binance was kicking the tires at FTX. They got to look at some of the financials, and they freaked. I mean, they just essentially like saw there's no way that we could do this. There's a fascinating kind of subtext here too, which is that suddenly Binance was cast in the role of being the lender of last resort, which again is a TradFi kind of, you know, trope, but it's interesting that Binance cast itself in that part. And he's a very smart guy, and he knew that casting himself in that role is not a bad thing, you know, like it kind of reflects the strength of his platform. It burnishes its influence in the marketplace. There's always a lot of benefit to contrasting your good fortune with the deteriorating fortunes of your main rival. And and there was indications not too long after the announcement was made, I'd say within 24 hours, that Binance didn't like what it saw. It wasn't going to be able to absorb FTX. And this just exacerbated the damage in the market, because on the one hand, the market got hopeful that Binance would be a white knight, but then that rapidly went away. And by the end of the afternoon on, what was it, Wednesday or Thursday? It's all kind of blurring at this point. But, Wednesday, we realized that Binance was going to go. And Alex, I mean, you covered the market reaction to what happened on that, right?
Yeah, I mean, it was so interesting when CZ and SBF both jointly announced that they had reached a deal whereby Binance would acquire FTX. The markets rallied. Everybody was like, "Oh, thank goodness! You know, it's not going to all go up in flames." But then, like pretty quickly after that, it just started dropping like a rock again. And you know, I remember, like, you know, we were talking in our digital newsroom. We were like, why? Like, why is everybody selling? And talking to traders that day, they were all, I mean, they were saying the exact same thing. Like, you know, as soon as the market had a second to take a breath, it realized, wait a minute, this isn't necessarily going to go through. You know, they read the CZ tweet thread where he was like, I've agreed to acquire FTX, maybe. And then like the last tweet in the thread was like, And by the way, I can walk away from this at any moment. So like, don't get
Yeah,
too
that's
excited.
a real vote of confidence. Yeah.
Yeah, and so it's like everybody finally got to the last tweet later in the day and started selling again.
Yeah.
Now, your reporting and Sam Hague's reporting, all the voices that you guys were talking to were basically saying, I don't, it's a nice idea, but I don't see how it's really plausible that this would happen. And I mean, there was even antitrust stuff that was bubbling up, like with the US, even though the FTX US was supposed to be excluded from the deal, there was speculation that, you know, US antitrust officials could still put the kibosh on a deal that would affect US customers if there was some kind of antitrust concern. So it was a deal too far. And again, it kind of gets back to our original idea in our conversation, which is, what is FTX? What does it own? What are its assets? What's actually there? You know?
Mm-hmm.
Because YYC pointed out, I think during the 3AC meltdown, that 3AC had a lot of ETH that it needed to sell. So I mean, just contributing to maybe the overall markets heading downwards, and maybe related to your point. And it's like, we don't know what's going to need to be sold. It's not, we know FTT is going down, we know Solana is going down, but where does Bitcoin, Ether, etc. fall? So
yeah, I mean, we're just starting to see the fallout from this, and maybe, you know, we can talk more in depth about kind of the first dominoes that we've seen fall. But I think, you know, just the bigger picture in this fallout, unfortunately, is credibility for the entire crypto space. Like, it doesn't matter how much we kind of bang the drum on DeFi and it being different. You know, this will still affect the mainstream view of crypto, that it's risky, that it's not serious, that it's this black box, like Ed was saying. And it's just such a shame that this, you know, one guy, one institution has caused so much damage so quickly.
Just building on that, I mean, you know, SBF is going to take a lot of heat, and he's deservedly so. But it's also like, we saw, you know, Sequoia lionizing this guy out.
Well, yeah.
You know, so I'm just saying, like,
it's not just him.
Yeah, like we're like, a lot of people built him up, and so.
Yeah, and even us, like in the media.
Yeah.
You know, like we should, like, us, you know, collectively, the Defiant, but also, you know, all the magazines and news sites that just propped him up without doing maybe all the necessary research. So it's easier to see in hindsight, right? Like you see this guy who just rose so quickly, and it's just like such an attractive story to tell. But, you know, at the same time, like we've said it this week a few times on our videos. I think crypto needs to stop just building up these idols. It's just, you know, it's been the case over and over again with Do Kwon, with Su. We love, you know, getting these heroes. Andre as well in DeFi. Why? Let's just stop. Like people are fallible. That's why we are building a code-based system. Let's not put so much trust in these, like, big personalities.
But a lot of that, the kind of halo effect that occurs around such figures is endemic to a bull market. I mean, bull market vibes just take over. And in a bull market, everybody who's doing what looks like really good work is going to be celebrated. And it's just not, and that happens in the stock market.
Yeah.
You know, that happens in the real estate market. That happens wherever large amounts of money can be made. So, I mean, I think we should be very self-critical as crypto media and so forth. But I don't think we need to beat ourselves up too much on that, because it's just what happens in bull markets. And Sam Bankman-Fried hit the bull market at just the right moment, and he cooked up a great story, and he got buy-in from Wall Street, Sand Hill Road, and Washington, D.C. was his latest kind of attempted conquest. And as soon as they kind of gave him the good, the good housekeeping seal of approval, and that became kind of a gateway for institutional money that came in, he became the kind of safe, steadfast crypto player that, the mainstream could trust. You didn't have to get too crazy with all of these exotic other players. You could trust him. He was a real traditional finance guy. And so the irony of him being the one who's the biggest blow up of all is just tremendous.
Yeah, and also the irony, we've played this clip before on our YouTube channel, where he's in Congress, like speaking in a room full of lawmakers about all the shady self-dealings in Wall Street, while he was doing the exact same
appalling.
thing.
Yeah.
So let's talk about the fallout that we're already seeing. I think this is probably, what do you guys think? It's probably just like the biggest kind of piece to fall, the biggest domino to fall after the fall of FTX.
Yeah. Well, we had been talking in the newsroom about how the Terra collapse earlier this year, the like price tag that's been thrown around is $40 billion of value that erased from the crypto market. So, I mean, that's like, we don't know what's going to happen with FTX and how much exposure people have to FTX and to Alameda, but like that's a pretty high bar to clear, right? Mm-hmm. Like $40 billion is a lot, and it's like FTX. I think the shock of FTX collapse, given the really successful PR campaign SBF had mounted, it was lean, profitable. He's, the 30-year-old billionaire. Like, I almost like, this is serious, but I think it's the shock of its collapse as much as anything else that's, leading people to say this is the biggest crash ever in crypto. It's definitely the most surprising, but whether it's as big as Terra is
what is the counterparty risk here?
Yeah.
So who's on the ends of all of Alameda's trades? Who's owed money? What happens to those trades? The same with FTX. Like that's what we don't know yet, is the reckoning. All of that has to be sorted, and so we could see reverberations of this for some time.
Yeah.
And Owen, you're reporting, you kind of, you got at that with this story, this BlockFi story, but there's going to be other.
Yeah.
So what is going on with BlockFi?
I mean, just at a super high level, mm-hmm. They have suspended withdrawals as of yesterday evening, Pacific time, and that came 2 days after I believe their COO said that essentially everything was fine. I mean, I feel like people were piling on her a little harshly. Like she said, everything is currently fine. She didn't necessarily say we're gonna be fine, but I mean, and the implication is that BlockFi doesn't have customer money on hand, and BlockFi offers they offer, I'm not sure what the current yield is. I think it's like 3.5% on customer deposits. So, I mean, that's headline news, is that they can't cover it, and that comes with the context of SBF bailing out BlockFi in July. Alex, I think you wrote that one, and they were offered a $500 million line of credit, as well as an impending acquisition, which hasn't actually gone through yet. So, but obviously we know something was going on, and there was some connection between. Again, we're coming down to the black box thing. BlockFi is a black box, and we don't know where customer deposits were going, but it seems like they were going somewhere related to FTX and Alameda, because right now people can't withdraw. So that's kind of one factor of contagion that we've seen so far.
And BlockFi needed to be bailed out in the first place because of Celsius at the time. I forget, or was it 3AC or was it Luna? Like, which of the many, many scandals?
This all happened after Three Arrows.
Okay, so BlockFi needed to be bailed out by Alameda. So presumably, you know, they had some funds, you know, locked up or in jeopardy, or you know, being used up involved with 3AC, with 3 Arrows Capital, and they got this line of credit from Alameda, which obviously now they can't use.
Yeah.
So presumably that's what's that pushed them to stop withdrawals right now.
I mean, there's a pattern in crypto this year, right? You pause customer withdrawals, and then some amount of time later, you file for bankruptcy. Like, I don't know.
Yeah, just building on that too. I mean, I read this, so I can't confirm it, but I believe BlockFi was also taking advantage of that GBTC trade, which I think 3AC was as well, where they're giving, you know, vanilla Bitcoin to Grayscale and then getting out GBTC at like a 20% premium in 6 months, and then they could sell that immediately liquid, and that was only available to institutions. I mean, or institutional investors, and that went negative in January, I think. So I'm pretty sure 3AC used that trade, and I'm pretty sure BlockFi did too. So, I mean, all these things, to your point, Alex, like all these things are echoing, right? Like what we're seeing now, like could be because of what FTX was kind of like patching up other people's problems, you know? So, I mean, it's just very complicated and very opaque. So kind of sifting through all of it is going to take a long time.
Yeah. And then there's Solana and the Solend story too, right?
Cam, you're muted.
Sorry. Yeah. So I was saying it's a really small industry. Everyone is working with each other. There are, you know, everyone has a link to each other. They're, you know, so it's the contagion risk is even greater because everyone's lending to each other and using each other's products. And so yes, like BlockFi was, you know, took this hit. Obviously, Solana very early on was the first to the Solana ecosystem, the Sol token. They were the first to be hit as well. You know, as you guys know, the SBF was a huge backer of Solana. Just invested in all of the Solana-based projects, and so the Sol token was like the first to really crater when the news broke, and we've, you know, continued to see the fallout from that. So
yeah, and I mean, I wrote a quick story on that, kind of, you know, simultaneously it seemed like initially people were like, oh, I think when people thought the deal was going to go through, Binance's acquisition of FTX, they were like, oh, Solana is going to fall apart because CZ is going to push all resources towards BNB and Binance's smart chain. And then I think as the deal, so people initially were like, oh, they'll pull resources. I talked to someone who said, no, he actually felt like, why would CZ just torch a bunch of value? Because there is, you know, arguably a lot of value on the Solana blockchain. So, but yeah, I mean, I got a quote from someone at Swarm, and him just saying like, well, now, you know, the training wheels are off for Solana, and it has to kind of sink or swim from here as you know, without major backing from a player like FTX. So we'll see how it goes from here, but it does feel like, yeah, training wheels are off.
Oh, yeah, it's gonna be tough. So what else can we say about the fallout? So BlockFi, Solana ecosystem, obviously the market. Well, we did this story. I guess like one silver lining is because of all the trading activity and, you know, everything happening on Ethereum in the past kind of couple of days, ETH turned deflationary. So I guess that's one thing, one good thing that happened in the market. But yeah, I mean that it's hardly makes up for all the uh, all the negative. So yeah, I think, you know, like we said before, we have just, it's the tip of the iceberg. Like we'll see more institutions, investors, CFI affected, and I don't know. I don't know how DeFi will fare in all of this. Like, you know, we've said throughout this conversation that, and you know, that this just highlights the reason why DeFi even exists. And you know, it's worth also highlighting throughout like all this turmoil, all of DeFi protocols have continued to run smoothly as intended. There have been liquidations in this space, but you know, everything has happened in an orderly way. No withdrawals have been paused because, you know, DeFi protocols shouldn't be able to even pause to even do that in the first place. So we'll see if that's enough to drive more people to DeFi. I think the space is still pretty small. That I don't know. I don't know if we'll see kind of more inflows from CFI to DeFi, or if people will just take their chips off the table and sell crypto and just wait in the sidelines until things cool off. What do you guys think? What's kind of, what do you think is next?
That's a big question.
Yeah, it makes me think of the correlation question, which has been a fascinating one over the last couple of years, where we saw crypto broadly correlated with equities, especially tech stocks. And one thing that I've been looking for quite keenly is to see if there's ever some kind of decoupling between crypto and stocks. With stocks so cheap right now, it could very well be that mainstream investors, when they're ready to put on risk, especially if inflation is dropping and there's a bet that the Fed will reduce interest rates or will stop its interest rate hiking policy over the next couple of quarters, that they'll probably gravitate into stocks first because stocks are cheap. But it should follow that crypto, you know, will have a chance to reintroduce itself to investors in a manner of speaking. And you got to remember that the memory of investors is quite short. And for all of the fire and brimstone of Celsius and Terra and Three Arrows and now FTX, it isn't totally surprising that this stuff is happening. Everybody kind of knows that crypto is pretty wild. It's a very young sector. It's a young industry, and there's no rules. So stuff is going to happen, you know? So I think in the long run, I wouldn't be so doom and gloom about crypto as an asset class for mainstream investors. But the key is, at some point, there has to be like real use cases that investors can see, oh, this is, and I don't think it's going to be payments. I mean, as much as Bitcoin is, it's so resilient and robust and so forth. And that's where I think the opportunity is for DeFi. And that's why it's so intriguing as a story, is that these DeFi protocols, which are all hard at work right now, even as all of this noise is all happening, we have yet to see them introduce truly mass market changing products, offerings, services.
I think the use case,
that story will be interesting.
Yeah. No, I think the use cases are starting to be there, but in a level that doesn't scale. So, you know, things like universal savings account, you know, the fact that anyone can own a stable coin and start earning interest on that. That's huge for, you know, emerging
But Ethereum is
markets.
still sorting out its kind of
But
infrastructure issues, which is okay. I mean, infrastructure takes time to build.
So I think solving for scalability, key things need to be still resolved, which is scalability, UX. Like it's still incredibly hard, just hard to use DeFi. Confirming transactions, paying for gas, on and off ramps into fiat. It's all just like hard to use. Even harder if you're using a roll up or if you're like using a layer 2, like going through a bridge. That's not something that mainstream will want to do.
It's unusable for the normal person right now.
And then regulation,
it's very intimidating.
Which regulation has just also played a really important role in the fallout of crypto this year, in regulation in the US. I mean, the fact that all these shady dealings were happening offshore in the Bahamas is because the US hasn't created a clear pathway for crypto to thrive here. The reason why FTX was able to do what it did outside of the purview of regulators is because it's just very hard to operate in the US. What Owen mentioned about the GBTC premium and how that screwed over retail, that's the reason why people are using GBTC is because the SEC has simply refused to approve plain vanilla Bitcoin ETF.
That's right.
So I think there's a lot of soul searching here, and I hope that US regulators are doing that as well. I think if we want crypto to be safer, then create an environment where crypto can actually thrive and build and grow in the US, or else people will find alternatives that will leave investors even less protected, which is what regulators are supposed to do in the first place.
Well, in SBF introduced his industry standards 2 weeks ago. What was it, 3 weeks ago?
Oh, yeah. Oh, my God, yeah.
So that's the answer.
Right. Oh, my God. We didn't even touch on that, how he was championing this.
Yeah, he's like, hey, I've got
this
the rules.
bill.
Right. Everybody just do this. I've got my 10 principles or whatever. If everybody does this, we're cool.
Oh, my God. He's anti-DeFi bill. It's just too much, this story. Anyways, with that, I think we should wrap up. But thanks everyone who joined. This, fascinating story. We're just seeing the beginning of it. So subscribe to our newsletter, subscribe to this YouTube channel, follow all of our writers on Twitter, follow us on Twitter. We're covering all the twists and turns of this story, and also especially keeping an eye on the DeFi angle, which is our specialty. So thanks again, everyone, and thanks guys for a really great discussion.
All right, see you guys. Have a good night.
Bye.
Later.